Good afternoon, everyone. This is Katie Moore. I will be hosting our presentation today about year-end fringe benefits. We do have a few people still trickling in here, so I am just going to give everyone a couple more minutes just in case anyone is having technical difficulties, but we will go ahead and get started here in about a minute. While people are still joining here, I did upload a copy of this presentation to the handouts area on your meeting panel. So if anybody would like to grab a copy of that to have after the presentation, it will be there. We also will be recording this session. It's recording currently. So we will have that available as well for you to be able to view after the presentation. All right, well, I'm going to go ahead and get started today. If you have any questions during the presentation, please feel free to put either in the chat panel or also in the questions area of the meeting panel. I will try to take a look over there from time to time and see if there's anything that I should answer as I go along. If I find that it would be more appropriate for me to answer at the end, I will get to your question at the end. Or if it's a question that's a little bit more personal to your company or a specific situation that may not be beneficial to the group, I will reach out to you after the call so that we can go through your different options and the questions that you have. All right, so this is my contact information. Again, my name is Katie Moore. I am the Director of Client Experience with PayEntry. I've been with the company for about 7 years, about a month shy of that. I began working on the front lines and working with clients like yourselves that are on here, answering questions, helping with payroll needs, setting up new things on companies, and troubleshooting issues. I kind of worked my way up and worked on our support team and worked more with the software, and then decided I really had a passion for leadership and working and helping develop the next generation of the team. So that's how I grew into the role that I'm in now. Currently, I am the department head for client experience. So over all of the service teams that work with all of you, and then also our implementation teams that bring on new clients. So I really have enjoyed myself here. I've learned a lot, always something new every day, and this is a great place to be. And we're so, so thankful to have all of you as clients and as partners in our business. So today, as the title would suggest, we are talking about year-end fringe benefits. So there are some other items that you may come across. If you come across any of those kind of things, please reach out to your dedicated client advocate. But these are the most common items that we see sent our way at year-end. Outside of large bonuses or commissions, which I did do a training on, I believe last week. If you missed that one, please feel free to reach out to me, and I'm happy to send you a copy of that or talk you through any of those things or reach out to your dedicated client advocate. But after those items, we receive a lot of questions about entering in personal use of company car, third-party sick pay, or sometimes referred to as a disability payment, short-term disability, 2% shareholders or S Corp insurance, and group term life. I also added some information at the end for how to contact your service team. Our software is pretty user-friendly, so sometimes we don't hear from all of you as often as we would like. So I do always like to include that contact information, so you do have that. All right, so just to jump right into the first item here, personal use of company car. So if you have employees working for your company that have a company car, but they're also using it for their own personal use, employers must withhold income taxes on the value of that personal use. There are several calculators out there. An accountant can definitely help you with calculating that information, and we can try to point you to a resource if you have questions. So this is a non-cash fringe benefit. So they're using the car, they're using that as a means for transportation. So it's not cash that's exchanged, but it is fully taxable. Federal income tax withholding is not mandatory, but the employee may elect to withhold it. Now, when I say that it's not mandatory, I don't mean that the amount is not taxable for federal income tax. I just mean whenever the payment is entered into payroll, you don't have to take it at that time. The employee will still owe taxes on that income that's recorded. If you do not have an earning code in your Payentry NextGen payroll setup, and I'll show you that here in just a moment, for personal use of company car, you may see it as PUCC or as auto or car or something similar. Reach out to your dedicated client advocate and they can get that set up for you. They can walk you through doing the entry. And so it can be entered on NextGen. You all have the access, or it can be sent over to that dedicated client advocate for assistance. So I'm just going to jump over while we're on this personal use of company car. I'm going to jump over and I'm going to do an example for you so you can see what this looks like in Payentry NextGen. So I'm just going to pause here and then choose the screen that I want to show. All right, I apologize. Give me just one moment. I'm having a little bit of a technical difficulty here getting this to switch screens. So give me just one moment here. And if I'm unable to get it to switch here, I can always do the example at the end. So just one moment. All right, perfect. So now everyone should be able to see my payroll batches screen on Payentry NextGen. I am working out of a demo database here. So these are companies that we have set up for training purposes and do not house any real employee information or company information. So I'm going to go back to the main company dashboard. For this demo company, I'm using here Robinson and Robinson. And the first thing I'm going to show you is how to check if you have an earning code set up for this item. So if you hover over where it says payroll setup, you'll then see the options for code groups, deductions, earnings, all of these. What you're going to want to check is your earnings list. So if you click on earnings, then you'll see here the second item that I have on this company is auto. I set this up personally, so I know that this auto is for the personal use of company car. Over the years, you may have, or a former payroll admin at your company may have requested the code and it may be called something different. For example, this company also has a car earning, but this earning is for a car allowance for the employee. So it's a little bit different. So if you have questions as to which item belongs with this item, the personal use of company car, reach out to your dedicated client advocate. They can check the taxability, make sure everything's set up correctly for you before you move on and make any entries. So if we were going to enter in this item for this employee, we would go ahead and move into continue payroll. I'm going to go into enter payroll wages. And then I'm going to go on to an employee's check. In this case, I'm going to go into Michael Robinson. He's the first employee, and I'm going to click to edit his check. So I'm just looking at his details and not the other employees on the pay grid. So right now, as his pay stands, he doesn't have any earnings entered. So what I'm going to do is I'm going to add an item for that personal use of company car, which is the code that I've titled auto. Now that the earning for personal use of company car is here, I'm going to input a test amount that I have. On the slide, I said that the example may be that the value of the personal use of company car would be $6,500. So I'm going to put that in here, and I'm going to click the calculate button. So as we come down here, we'll see the earning was entered, the $6,500. As this is something that the employee has been using throughout the year, and this is not an item that you're actually paying into them, we're just recording the item for tax purposes for their W-2, and so they're paying the proper taxes and they're compliant, and you're compliant. It's also got what we call a matching deduction. So the $6,500 goes in, and then all the taxable wages are calculated, and it then comes out. So it goes in, the taxable wages are calculated, and it then comes out. So now the employee's paycheck still shows as zero, but these wages were recorded. Now, in the instance of personal use of company car, because it is taxable for everything, including Medicare and Social Security, you do want to let the Medicare and Social Security calculate. So what I would recommend is I would recommend making this entry either now, if you know what the number is, or on your last payroll of the year. Because if you enter it on your last payroll of the year, put it on their normal check, let's go ahead and let's pay him 80 hours. What that is going to allow to happen is then his Social Security and Medicare taxes are going to calculate for what he owes on that entire amount of wages. So the $6,500 plus his normal earnings. If you don't do it on a regular check, if you don't do it on a check with other wages, then you're in a situation where the employee has the taxable wages but hasn't had the Medicare and Social Security tax withheld, and that creates what is called a FICA variance, so a Social Security and Medicare variance. The system looks at the employee's wages every payroll to see the percentages, because they're at a fixed percentage, to see if the percentages of what they have paid in to Medicare and Social Security match up to the wages that they have based on those percentages that are locked in. If the employee has been under withheld, so if you entered this on the employee and you entered it without his 80 hours, in this instance, this employee, give that just a minute to load here. Here we go. In this instance, this employee would be under withheld on $6,500 in wages for Social Security and Medicare. If anybody has any questions about that, again, please feel free to reach out or pop them down in the chat. So that's an option. The other option for you would be if you are going to enter this on a separate payroll, we can untie this matching deduction from the earning, and that's something that you would want to reach out to your dedicated client advocate for. The amount of the Social Security and Medicare, we could allow that to calculate, and then we would enter manually the deduction to net it to zero. And so I'm just going to show you what that process looks like quickly, just so you see the difference and you see the two options. So I'm going to pause sharing here quickly so I can go in and make that update. Okay, so now you should be able to see the live version of my screen again. And now I am back on Michael Robinson's check. I've untied that matching deduction from the earning. So now you'll see that we have this $6,500 of wages that's being applied. We have all of these taxes coming out, and then there's a net pay here currently. So what I'm going to do is the first thing I'm going to do is I'm going to, in this instance, force the federal withholding and the North Carolina withholding to zero. So anytime you want to force a withholding to zero, and this is just for income tax withholding, you never want to do this on Medicare or Social Security because, like I mentioned earlier, it will create that variance. But anytime you want to force a withholding tax to zero, you add a line item for that tax in payroll. So if I click to calculate check now and look down here, you'll see that only the Medicare and Social Security are coming out, and we no longer have taxes coming out for federal and for North Carolina. So what I'm going to do at this point is I'm going to add the deduction, and I'm going to take the deduction to be the rest of what he would receive for net pay in this case. So I'm going to use the D auto, personal use of company car. And the amount here is $6,002.75. So I'm putting this in as the amount. And then I'm calculating. So now we're in a place where the wages have been recorded. The Social Security and Medicare have been taken out. And then the rest that was left over has been taken back out. So we're back into a situation where we have zero. You also can do the same thing with this type of entry if you do it through check calculator with a manual check, which looks very, very similar to this. If you haven't used check calculator to record a manual check, which typically would be something that you're just recording wages or you're paying wages outside of payroll and then needing to record them into payroll for the W-2 purposes, that's what we use that item for. Your dedicated client advocate can walk you through and show you how to use that product as well. But for the purpose of today, I'll just stick to showing you these two different options for entry here for the personal use of company car. All right, so I'm going to hop back into the slides and we're going to move on to another item. Sorry about that. All right, and so now you should be seeing the personal use of company car again. So I'm going to move forward onto our next item. All right, so the next item that we have on the agenda is third-party sick pay. You may hear it referred to, as I mentioned earlier, as STD, short-term disability, or some other type of disability benefit, but it's an insurance disability benefit that provides benefits to employees in place of lost wages due to absences caused by an illness or non-work-related injury. Most of the time, the employee taxes are handled by the third-party provider. The income tax withholding does not apply unless requested by the employee. This is something where out of their payment, they'll typically only see Social Security and Medicare, but they can request, or if they have a different relationship with that provider, they will withhold state and federal income taxes as well. Most commonly, the employer is responsible for recording wages for W-2 purpose and for paying, depositing, and reporting the employer taxes on the sick payments. So we record these into payroll for payment of those applicable taxes and also to update their W-2 wages. Now, not all third parties have the employer and their payroll provider create the W-2s for those employees. Some of those third parties will actually create the W-2s for those wages, in which case your employee would have a W-2 from you, from what they've worked, and then they would also have a W-2 from their provider. For the employer taxes, though, we would still need to make entry into our system, And then we have a setting on your company that we can set to not include the third-party wages into the employee's totals for their W-2. So I have noted here, if that third-party provider has indicated, or if you know based on your relationship with them, that they will create the W-2s for these payments, go ahead and let your dedicated client advocate know, just so that way they can turn on that setting and make sure that we don't duplicate any efforts and cause any issues for the employees when they go to file their taxes. If you're not sure if that's how it's handled and you have somebody being paid third-party sick pay or a disability benefit, check with the provider of that benefit and they'll be able to tell you what that relationship looks like. So this is another item that can be entered on PayEntry NextGen by you as the employer, or it can be sent to your dedicated client advocate for entry. So for the purposes of this training, I am just going to hop in and show you what it looks like to enter in one of these third-party payments. All right, so everyone should be looking at my PayEntry NextGen pay grid again. From this pay grid, which I got to by continuing the payroll, going into enter payroll wages here. This grid has options for adding a regular paycheck. And then next door there, you may have noticed this before and not known what this meant or what you could do on this screen. There's also an option for adding a 3PSP or a third-party sick pay check. So you would get paperwork in the mail from that third-party disability provider, and it would state the taxable wages the employee received and the amount of FICA that was paid on those wages. Once you've received that paperwork, you can give us a call. We're happy to help. You can send it to us, or you can give us a call. We can walk you through, because you do have the access to enter this yourself here at this option. So for Michael Robinson here, I'm just going to click 3PSP. It's going to bring up another screen. It's going to refresh this screen and bring up another check here, and it'll be designated. If you added a regular second check for Michael, it's going to have a little number beside it here. The 3PSP also has a number, but it does have that 3PSP before, so you know which one you're working with. So I'm going to go into the edit check option here for Michael Robinson for this third-party sick pay. And you're going to see this grid. So the two options that you have for entering on this check just looks a little bit different than the standard check you're used to seeing here. You can let the system calculate the FICA for you, and I'll show you what that looks like, and then you can check it against the paperwork. That's what I tend to do. That way I don't have to make any entry if I don't have to. Makes it a little bit faster. So for example, if this employee had received $5,000 of a taxable benefit, it will also show you on there if there are any non-taxable benefits, or if it's a long-term disability pay that is not taxable, it'll show you that information. For the purpose of this, I'm just going to show you this taxable pay. So it'll say the taxable wages, you'll put in 5,000. When I calculate the check, it's going to give me over here on the right-hand side, it's going to show me the Social Security tax and the Medicare tax. This amount should match what you have on the paperwork. Because the Social Security and Medicare, as we talked about earlier, is calculated at a fixed percentage, it should show the same amount as the paperwork. Sometimes if it's an odd amount, if it's $5,000.51, there may be a difference in rounding. So what is on the paperwork and what is in our system may look a penny or two different. If that is the case, what you'll want to do is you'll want to enter what the paperwork says, because you'll want those wages to match, or those taxable amounts to match. So in that case, right now it would be locked down because I have the system calculating the FICA. You would uncheck this box and you could enter in the two options there. Down below, the third-party federal income tax or the North Carolina state income tax, that's where if the employee had opted, or if the employee had the relationship with that provider to pay the federal and state income tax withholding, there would also be numbers for those on the paperwork. And they're all pretty standard, and I find them all very, very easy to read. That's probably easy for me to say. Obviously, I've seen thousands of them at this point. So if you have questions, definitely reach out. That's what we're here for, and we're always happy to help walk you through this process and help you decipher some of these things that you receive. So for this, I'm just going to go ahead and put this FICA amount back. And then you'll see here below, we have the $5,000 that I entered. It shows you a net pay. That net pay will also display on that third-party paperwork that you have. This isn't an amount that this employee is going to receive. We're just recording the wages. So you'll see the third-party Medicare and Social Security. It looks different than what their normal Social Security and Medicare looks like. So you'll see that we've added that in. We have the amounts that the calculator calculated up at the top. Then we also have the taxable wages adding to all of the other taxes as are applicable. Down here for the employer taxes as well, and those will calculate on so you can pay your portion of FICA or any other applicable taxes. So that's the process of entering that third-party sick pay. Once I'm done here, I can save and close, and this would just process through with my regular payroll process, the same as any of these other checks and hours that I would be paying for employees. All right, I'm going to hop back into the presentation here. All right, and then we're going to move on to the next item. All right, next on the agenda, we have 2% shareholders, or also commonly known as S Corp health insurance. So the value of the health insurance benefits for owners and shareholders must be included in federal and state income taxable wages. The value of the health insurance benefits for owners and shareholders are included in those taxable wages. They're taxable for federal and state wages only, although at times the employer does not withhold the FITW and SITW. And again, I'll show you what that looks like here in just a moment and what those options are. The employee will owe taxes on these amounts. So if you don't withhold it on the check, they will still owe them. It's just the way that they're entered. Most of the time we enter it and we have a net zero check, kind of like the first option that we saw with the personal use of company car, and then the employee handles the taxes on the back end. The employees that receive this benefit usually own more than 2% of the company. This is another situation where if you do not have an earning code set up in that company setup, in the payroll setup, reach out to your dedicated client advocate. Commonly, you'll see these listed as 2% shareholders or as S Corp. Those are the two things that we normally see that people have requested in their setup in the past. But if you have any questions, definitely let us know. So this can be entered in on Payentry NextGen, like I mentioned, by you as the employer, or it can also be sent to the dedicated client advocate for entry. So in this example, we'll say that the value of S Corp was calculated to be $10,000. All right, and I've hopped back into my pay grid here. So I'm going to go back into our friend Michael Robinson. I'm going to remove his personal use of company car. I'm going to remove these tax options here. So we're back to a clean check the way that we started. So the same way that I did with the personal use of company car, I'm going to add the item for S Corp. Whenever you're entering S Corp or personal use of company car, you're entering in the earning first. Because in most situations, we have that automated deduction set up there, like we saw in the first example with the personal use of company car. So you enter in the earning and then the deduction automatically applies. So in this case, the earning here, and all earnings in this list start with E. So earning S Corp help. And then in the amount, I'm going to put the $10,000 that I mentioned on this slide and click to calculate the check. So this one will look a little bit different because the taxability of this fringe benefit is different. As I mentioned on the slide, it is taxable for federal and state income taxes only. So on the employee's check, they'll have the earning. Then you'll notice that it's calculating these taxable wages for federal and for North Carolina, and then it's coming back out. So they have a net zero pay. So for this one, really the option here, if you are not going to be withholding the income tax, is going to be to record it in this manner. And this is probably what we see, I'd say 99.9% of the time. It's not often that when we're asked to record this benefit, it's recorded and it has the taxes being paid through payroll. So this is the example I'm going to show today. If you have a different request or if you have questions, please let us know and we can walk you through any of those other options, but this is the most common that you will see. All right, so hopping back into the presentation here, group term life is the next item that we have. Group term life gets a little bit tricky. There are several different options and it all depends on when you're recording it in the year, if the employee is still active, and some different items like that. So I'm not going to show an example of this one, and I said at the bottom of the slide, I recommend that you work with your dedicated client advocate on this to determine what option is best, especially if the employee has left, if we're recording one-time adjustments or payments. It's always just best to work through those with us, and we're happy to help again at any time. So the value of group term life insurance in excess of $50,000 minus any amount paid by the employee is included in the employee's income. So it's considered taxable for federal, state, Social Security, and Medicare. The W-2 boxes 1, 3, 5, and then 12C for the GTL are affected. You may also hear these GTL earnings referred to as imputed income. So I put that in here just in case you hear that and you're wondering what that is for a year-end fringe. So there are 3 different scenarios for entering in the group term life for an employee. So if we're at the beginning of the year, and if you have GTL and we're doing a one-time adjustment at the end of every year and you're pulling together all of those numbers, get with your dedicated client advocate, because what we can do is we have a GTL calculator that we can set up. It works best if we do it at the beginning of the year. We're able to put in the units. So we look at the amount of group term life that the policy allows, apply that to the employee, and then it looks at their age, it looks at their income and several other factors, and it applies the correct amount on a per payroll basis. So once you set it, it is a set it and forget it, which is one of my favorite things. It's one thing that you can check off of your year-end list. So I think that's important. So if you normally pay out GTL and you'd like to talk about your options to set that up, reach out to your dedicated client advocate. They can help you set up that GTL calculator. The second scenario would be the employee is active and there are live payrolls left in the year to record the GTL payments. So the reason why that's different from the third scenario of the employee is not active or will not have future payrolls within the year is because of that Social Security and Medicare that we talked about earlier. Because it's taxable for Social Security and Medicare, those employees are going to owe those taxes, and the payment and the recording of those taxes is the responsibility of the employer in this situation if the employee has departed and you did not collect that from the employee at that time. So If you have an employee and you're paying out their last paycheck, one thing that I tend to suggest is to reach out to us and see if you have GTL, if that's something that we need to address. Sometimes you don't always know. Somebody leaves and you're not sure the situation, someone's sick. So there are a lot of different situations where things happen, but reach out to us and talk to us about your options and what we can do there. But if the employee is active, then we can record that one-time earning or that one-time earning adjustment for you to put in the GTL to add to their taxable wages. And then we would take the Medicare and Social Security taxes from them at that time. If the employee is not active, the two options are we can record the GTL and the company will pay the Medicare and Social Security, like I mentioned, because it is the responsibility of the employer. But another side of the responsibility of the employer can be, we can also key it as uncollected Social Security and Medicare from GTL for their W-2. So that's something that can actually show on their W-2, and then they would, in turn, they would owe that when they go to file their taxes. So unless you have an agreement with that employee that you're going to cover that Social Security and Medicare for them, the best bet is to go ahead and reach out to us and have us key that if they've left, so we can put it in there as that uncollected Social Security and Medicare. Any questions you have for that, please let us know. Again, I'm not going to show an example of these just because there are so many intricacies and different situations, so it's best to work with a dedicated rep on that. So I've mentioned a lot, reaching out to your dedicated client advocate or reaching out to our service team. If you have questions or you want to send requests, so any of that paperwork I said that you can send over yourself or you can enter yourself, you can reach out to your dedicated client advocate by their email address or their direct phone number. For your dedicated client advocate, their email address is their first name at payentry.com. So for example, Katie at payentry.com would create a case for myself, Erica at payentry.com, etc. And that would go directly to them and they'd be able to assist you. If you are one of those that I mentioned earlier that doesn't call often, so your payroll process, you've got it down pat, so you don't reach out to us much, so you haven't spoken with your dedicated client advocate too many times, we try to send out communications from them so that way you receive their information. But if you don't have that contact information, you can also call our service center. You can reach out to us at 888-632-2940, and you'll get the next available representative, and they can either take care of your questions right then, or they'll go ahead and route you to your dedicated rep. That way you have that relationship. And you can also email our service center at service@payentry.com. And once you send that over, we can again route that to your dedicated rep, that dedicated client advocate, and have them give you a call or have them work with you through email or set up a training. All right, so it's been about 40 minutes. So I know that there was a lot of information. I showed a few examples, went through all those different items. I'd like to open up now if there are any questions. If you'd like to type those either in the questions panel or in the chat panel. I'll give everybody just a moment here. I did not have anything come through during the training, so I don't have any at this current moment to answer, but if anybody has any questions, now is the time to go ahead and enter those in. All right, I don't see that anyone is typing. So thank you all so much for joining me today and for going over the year-end benefits. If you have any other questions, again, reach out to your client advocate. You can reach us at the number below, and please also feel free to reach out to me. Again, I did include a copy of the presentation in the handouts area. And if you have any trouble downloading that, or anything like that, please let me know, and I'm happy to send that over to anyone. We will make the recording available after the training, and I really appreciate all of your time today. Thank you.